China and Japan, turning net sellers of US treasuries and net sellers of the dollar. And that is something that is likely to increase. The fact, as I said, that central banks around the world are selling fiat currencies, particularly the dollar, which is, the king rat of fiat currencies, in return for real money, which is gold, also confirms this trend that the foreigners basically are getting rid of dollars and going into real money.
De-dollarization has been a growing trend, with countries like China, Russia, and India actively working to reduce the US dollar's dominance in the global economy. The dollar's weakening performance against gold reflects a loss of confidence in its role as the world's reserve currency. Central banks around the globe are rapidly increasing their gold reserves, preparing for a potential currency crisis. In 2024, a Gold Council survey revealed that 69% of central banks believe that in 5 years, a larger portion of their reserves will be held in gold, reducing their reliance on US dollar holdings. Currently, only 17% of global central bank reserves are held in gold, highlighting a significant shift in reserve management strategies. Alasdair Macleod warns of an impending global financial crisis that could have severe consequences for major currencies like the euro, yen, and sterling. He emphasizes the urgency of converting credit into gold, which he views as real money, despite government skepticism. Macleod cautions that the collapse of fiat currencies could drastically diminish the purchasing power of people in the West, urging individuals to take proactive measures to safeguard their financial future. He also highlights the upcoming BRICS summit, where nations outside the traditional financial system are considering alternatives to the US dollar, potentially backed by gold, which could accelerate the decline of fiat currencies. BRICS, initially formed by Brazil, Russia, India, China, and South Africa, has since expanded its membership and is preparing for its next significant steps at an upcoming summit in Kazan, Russia. According to a new report by the Official Monetary and Financial Institutions Forum, OMFIF, BRICS nations will be discussing the implementation of an alternative to the current dollar-based oil payment system, potentially using the Chinese yuan. Additionally, BRICS has been exploring the development of a common currency to facilitate trade among its members, with some reports suggesting that this currency could be backed by gold, further reducing the reliance on the US dollar in global trade. Macleod suggests that if Russia and China were to back their currencies with gold, even for limited uses such as cross-border trade within the Shanghai Cooperation Organization or BRICS, it could accelerate a rapid decline in the US dollar's value. He believes this move would undermine confidence in the dollar as the global reserve currency, potentially leading to a swift erosion of its purchasing power. Ready to dive in? Before we do, take a moment to like and subscribe if you're enjoying the content. We're so close to hitting 1,000 subscribers, and with just 11% of viewers subscribed, every click counts.
There will come a time when the average American begins to realize that it's not prices going up, but it's the purchasing power of the dollar going down. Now, the great Austrian economist Ludwig von Mises opined that when the users of a currency finally realize that it's the currency going down, then it's at it. That's the end of it. And so the only question remaining is how quickly could this happen? Well, I think it probably depends to an extent on what comes out of Kazan. I mean, if the Russians and the Chinese do back their own currencies, for limited purposes, perhaps initially, like, cross-border trade settlement in the Shanghai Cooperation Organization and BRICS, then that could accelerate the decline in the dollar very, very quickly. And once it starts going, the question will be asked increasingly, what's your faith in the US government's management of the dollar? How's it today? How are you seeing it? This is how it will affect ordinary people. And of course, it means that those on fixed income, the elderly in particular, who are living off savings, the unemployed, the poor, they're going to get hit very, very hard by this. The middle classes will find that their wealth is wiped out. Quite a lot of the wealthy people will also really suffer, though generally there is a sweet spot for them, and that is, the rarely wealthy. They manage to find ways out of this, one way or the other. But there will come a point where I think even they're going to have a problem. And because this is going to be everywhere, And I'm not just talking America. I'm talking about the euro. I'm talking about the yen. I'm talking about sterling, even the Swiss franc. There's going to be no hiding from this. You can't just sort of get out into a firm currency or, a proper gold substitute, because where's the gold substitute? I mean, it's only going to be for trade purposes, perhaps, for if you're Russian, Chinese, or in BRICS. So for those of us in the West who would probably be stopped from participating in this anyway, from buying yuan or whatever, on that basis, this is going to be very bad news for everybody. And this is why I tell people, those who are prepared to listen, for goodness sake, get out of credit and get into gold, which is real money, real legal money since Roman times, and it still is, despite the propaganda of governments who say it's no more than a pet rock.
The silver market continues to find strong support near the $30 level, signaling that traders are eager to push the uptrend forward. As a result, this market appears to remain a buy-only situation. The key question now is whether demand for silver will increase, particularly as central banks clarify their monetary policies. Inflation alone could be a driving force that lifts silver prices, but another factor to consider is whether more people will invest in businesses and stimulate economic activity, which typically benefits silver. Beyond being a precious metal, silver is also a crucial industrial metal, further supporting its demand in various sectors. Alasdair Macleod believes that silver's value has been suppressed, pointing to its 4-year supply deficit, as reported by the Silver Institute. He also highlights Russia's recent decision to permit its wealth funds to purchase silver, interpreting this as a sign of silver's significant undervaluation relative to gold. Beyond its role as a monetary metal, Macleod emphasizes the industrial importance of silver, predicting that even if its price reaches $100 an ounce, its unique properties will continue to make it essential for industrial applications. Now let's redirect our attention to a video.
Silver's, people call it the poor man's gold. Silver is a monetary metal, but it's not valued as such. It's valued on industrial grounds, and that value, I have to say, is somewhat suppressed. It has been in supply deficit, according to the Silver Institute, for the last 4 years, which is a crazy situation. I think just purely on commercial fundamentals, I would see silver going quite a lot higher anyway. As gold gets more and more in the forefront of replacing credit, if you like, in people's ideas of value, how do we protect ourselves? Then silver is going to rise even quicker. Bear in mind, silver relative to gold has been in a long-term bear market. I mean, Diocletian's edict of maximum prices put the ratio at 12. If you look at what Sir Isaac Newton was saying, he was saying I think something like 14.5 or 15.5. The big slide really was in about 1870 when Germany, in the wake of the Franco-Prussian War, actually it was a bit later than 70, it was probably about 74, 75, came off the silver standard, having got gold reparations out of France. So they went on to a gold standard. And from that point, really, there was virtually nobody on a silver standard in Europe. And the price fell because it was no longer reflecting its moneyness, if you like. It wasn't a standard except for small amounts. In this country, it's legal tender for 40 shillings, which is £2. But any more than that, it's not legal tender. So this is the sort of problem that silver has faced. The current level of the relationship between gold and silver is a ratio of around about 83, 84 as we speak. That, in my mind, is absolutely crazy. It is far too high, given the circumstances that we're seeing of the early stages of a collapse of fiat currencies. It is purely mispriced. And I was interested to see that about 4 or 5 days ago, the Russians passed some sort of regulation for their wealth funds that they were going to go out and buy silver. Why is that? I mean, you could be a conspiracy theorist and say they want to bankrupt the Western bullion banking system. But let's assume that's not true. They're buying silver because they see it as an extremely precious metal, and they see it as something which is wildly undervalued relative to gold. So, and I think it's probably an indication of where Russian policy is going on gold. rather than anything necessarily about silver. I mean, Russia is vying for the second largest output by gold mine of gold, vying that position with Australia, China being number one. So she's already got all the gold she needs, and it seems to me it makes an awful lot of sense for her to wander in and start buying silver. Apart from anything else, it is an extremely useful material for industrial purposes, and I don't see that changing. Even if silver runs up to $100 an ounce, I don't see if you like, the qualities of silver being matched by anything else in terms of its applications.
Gold has maintained its allure for centuries and continues to capture attention, as evidenced by its recent price spike to all-time highs, reinforcing its status as a legitimate asset class. With the US dollar losing value at an alarming rate, the upcoming BRICS summit has prompted nations outside the traditional financial system to seek alternatives to dollar-based transactions, potentially leveraging gold as a backing. This shift indicates a growing recognition of gold's enduring appeal and its potential role in the evolving landscape of global finance. How do you view gold's role in your investment strategy? Do you consider it a safe haven or a speculative asset? Share your feedback in the comments below. If you found this video useful, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.